Welcome back to Trading Basics with Jared Roboski. We're going to be covering the topic of volume. This is the first indicator that we're going to cover because really it's the simplest indicator and it's a very important indicator. You can gather a lot of information and data from this indicator. And there's a lot of other indicators that we'll get into later that use volume as a very large tool within that indicator. It uses data and information from the volume indicator. So what we're going to look at here is a chart of the SPY. SPY is the ticker symbol, and what that is that's an index fund of the S&P 500. And this can be traded on any exchange. So let's get right in here. We're on the 4-hour time frame. And volume is represented down here at the bottom. Now I've changed these volume candles to be all white. The default setting to these is going to be red and green, like your candles. The reason why I changed mine to white is that there's really no, like a red candle signifies that we had a down day, but with volume, there has to be a buyer for every sale, right? So for anybody selling this asset, there's somebody buying it on the other end of that transaction. So volume to me should never really have a red or green candle, and that's why I take the color off, because it helps change emotion. And on my own charts, I personally change the color of these candles as well, because red and green can trigger certain emotions. And in trading, you want to be emotionless and you want to trade based on the data that's in front of you. So let's look at some of these volume metrics. And volume can kind of signify how powerful was that move, you know? And you know, was it a really strong move? We looked at trend lines previously. What I like to see is if we break through a trend line, especially a higher time frame trend line, I'd like to see it done on heavy volume. If it's done on low volume, you'll most likely get a rejection. And look, this is or you can have what's called a throwover and then get a rejection. It's what's commonly called a bull trap in this situation. In another situation like this candle here, a bear trap. But let's look. Let's look at some volume. So we can see right here, we had this uptrend all throughout here, this uptrend. But look at the volume. The biggest volume was at the bottom right here. And then as this price goes up, the volume's declining. So that tells you that that's a pretty weak move to the upside. So you did clear this previous high right here. You broke above that, but then you failed very shortly after right here. So you had a failure right there. And then look, as you start coming down, volume starts going back up as people realize that was a trap. But then what we're seeing here on this move to the upside is we've got some pretty good volume in here. These are good volume candles, right? So let's look at some other good examples. Here's a great example. See this high volume candle here? You know, you could be, let's say you were out of a trade. You're out of your trade, you're watching this pull back. It bounces here. It's bounced here previously. It was a high here and a high here. So you say, you know what, I'm going to draw a trend line. I'm noticing a trend there. And I want to take a trade. based on this trend line. So it comes down. You come back and revisit this. You could decide to go long here and buy. And then as soon as this breaks through here, we get a close below, you get out, you were wrong. And then you say, you know what, we broke that trend line. Last couple times we got rejected from that area, we had a pretty good pullback, right? So you could say, okay, I want to short again when we retest this trend line here. And then look what happens that very next day. This is a 4-hour time frame. Right here, you have a bearish engulfing candle. Remember, we discussed in the first episode, bearish engulfing candles. So right here, price action traded above the previous candle and closed well below previous several candles. So that was a very large bearish engulfing candle on very high volume. So what that tells me is a move on high volume with a bearish formation is going to have some downside. So this would have been an easy short to take. And look, for the next several days after, nothing but downside. And you don't have to get greedy with that trade. You could have exited it. You could have exited pretty quickly. And we'll get into some of these strategies later on whether you are taking a swing trade or a scalp trade, and I'll show you how I do both of those. So thank you for paying attention to this episode and joining us for the episode on volume. The next episode we're going to get into will be on moving averages, and that'll be the next indicator. Before we leave, let me show you this really quick. Right here on your TradingView website, you're going to have this indicators tab, and you can click that indicators tab. I've got a bunch of favorites, but volume is a pretty standard indicator, so that should be in there. But you can just type in up here in the search bar what indicator you're looking for, and it'll pop up right there. And this one right here is the Trading Views indicators. And if you scroll down, you'll see these are indicators that all kinds of other users have made. And you can, you could spend a ton of time going through these. You don't need all that. You can keep it simple, and it's best to keep it simple. You only need a couple indicators. You can really trade with no indicators, really just volume and trend lines, and make it work. So we'll get into this next episode on moving averages. That's another very powerful indicator. Thank you for joining us today on this episode. I'll see you for the next one. Thank you.